11 Bitcoin ETFs have just been approved, and this is a really exciting time for the crypto space. So, in this video, I'll be covering everything you need to know about the development, such as why is this such a big news? What does this mean for the crypto space and Bitcoin? Will it go to the moon? Then, if you are planning to invest in Bitcoin, is it better to invest in the Bitcoin ETF or in Bitcoin directly? Also, do join my Telegram chat group to discuss stocks and personal finance if you have not done so. Alright, let's jump right in. First up, in order to understand what's the Ping Ping Bang Bang all about, you have to first understand why is there even a need for Bitcoin ETFs. Like, isn't there already a Bitcoin futures ETF? BITO? Yes, but the problem with a futures ETF is that futures have an expiry date. So you will need to continuously roll the futures forward as they expire. Because of this, there will be fees and inefficiencies, which over time will cause a drift between the futures ETF and Bitcoin price movement.
Okay, but then isn't it simpler to just buy Bitcoin directly instead?
Well, not quite. Because first, you will need to have a crypto exchange in order to buy Bitcoin. And which exchange should you use? Is it the top exchange, Binance, where the CEO was charged for money laundering? Or the former second top exchange, FTX, where the CEO used it to scam everyone's money? Basically, there's mistrust everywhere, because it's hard to know which is a good exchange to use. Then after that, not everyone knows how to send their crypto to an offline cold storage. And even if you know how to do that, there's still a risk of losing access to your cold storage. All this just makes investing in crypto extremely complicated. Then how? That's why a Bitcoin ETF could help to solve all these issues. But perhaps the bigger implication is that with the approval of Bitcoin ETFs, this will now give access to traditional money to start investing in Bitcoin, such as pension funds, hedge funds, and family offices, all of which stay away from Bitcoin all this while because of its complexity and regulations. The ETF fund managers knows that there's a huge demand for Bitcoin ETFs. That's why there's currently a huge price war going on. Both BlackRock and ARK had just cut their expense ratio right before the ETF approvals. And right now, most of the fund managers are waiving off the expense ratio, which will later go up to as low as 0.2% fee. Because this is a winner-takes-all game, where investors would all just flock to the most popular ETF and stay with it. Which, based on the trading volume of the first day, if we ignore the Grayscale Bitcoin Trust BTC, since its volume was just due to existing investors selling shares, the winner here would be iShares Bitcoin Trust, or IBIT by BlackRock. So what does all this mean for the price of Bitcoin? If you ask Cathy Woods from ARK Invest, who is always super bullish on this kind of things, and I kid you not, her prediction is that Bitcoin could reach $1.5 million by 2030, which is like 30x from the current price. But before we get all excited from her predictions, let's just remind ourselves that almost all of her predictions have been wrong. So let's ignore her predictions for now. Besides that, Standard Chartered also came out with some pretty bold predictions for Bitcoin. They think that Bitcoin could reach $100,000 by the end of this year, then $200,000 in 2025, which is still 4x from the current price. That's because they are comparing this to when the first gold ETF was launched back in 2004. And after that, the price of gold rose by 4.3x in 7 years. This could be due to the ETF making it more accessible for investors, thus giving it higher liquidity. However, whether the price increase was due to mainly the gold ETF or not still remains to be seen. As we can also argue that due to the 2007 financial crisis, investors may be looking for a safe haven to park their money, which in this case is gold. So again, I would just say that it's best to just take their predictions with a pinch of salt. While Bitcoin ETF may bring in more liquidity, the price of Bitcoin may not go up as fast as we may think. That's because even though we may see more people trading the Bitcoin ETFs, in actual fact, these are just traders who just move from trading the Bitcoin directly over to trading the ETF instead. We know this because Coinbase generates 90% of its revenue from retail transactions, which is highly correlated with crypto asset prices. That's why even though on the first day we saw Bitcoin ETFs having a $4.6 billion in volume, and Bitcoin ETFs giving anywhere from 1.5% return to negative 6.5% loss, the price of Bitcoin barely moved that day. Also, while Bitcoin ETFs open the door to a new set of investors, you will still need fund managers to create financial products that are built around Bitcoin ETFs, all of which takes time and demand to do. But now, let's say you are interested in investing in Bitcoin. Should you invest in the ETF, or is it better to just invest in Bitcoin directly? It depends. The whole reason Bitcoin was created in the first place was not because it wants to let people what big, yeah? That's Dogecoin. It's same but different. For Bitcoin, the idea was to create a decentralized digital asset so that there's no one single person or group has control over it. This is so that we could move away from the dollar, where the government is in control of the money that we own. They can print more money, block transactions, or just outright seize the money if they wanted to. So if this is your reason for owning Bitcoin, then it's best to just buy it directly. However, as mentioned earlier, buying Bitcoin directly comes with its own problems. For example, you need to choose the correct exchange, learn how to transfer your crypto to a cold storage, and make sure that you keep your seed phrase safe. So if you want to avoid all these issues, then just get the Bitcoin ETF, because all you need to do is open up your broker, look for the ETF, click buy, and you are done. So simple. Plus, US brokers such as Interactive Brokers LLC are insured for up to 500k under the SIPC insurance. Though, just take note that non-US brokers like IBKR SG and Webull SG don't have SIPC insurance. Instead, they keep the customer's asset at a separate custodian, which will mean that our assets are still safe in the event of a broker collapse. However, there's another risk that you will need to take note of. Most of the ETFs are keeping the Bitcoin with Coinbase, others with Fidelity, Gemini, and BitGo. And as we have seen in the past, crypto exchanges are not immune to hacks. So if ever Coinbase gets hacked and the cryptos got stolen, and if Coinbase and the fund managers don't have enough insurance for the losses, or the Bitcoin ETF could collapse. Meanwhile, people who keep the Bitcoin in a cold wallet would still be safe. Another small downside with Bitcoin ETF is that there will be expense ratio, which will add up over time. So, for example, if you decide to go with BlackRock's ETF iShares Bitcoin Trust, the expense ratio would be 0.25%, which meant that for every $1,000 you invest, you will have to pay $2.50 in fees every year. Personally, I believe that Bitcoin adoption will continue going up from here. Non-financial advice, low. That's because 1. The number of addresses that hold Bitcoin has been going up. But more importantly, about 70% of Bitcoin supply has not moved since more than a year ago. This is despite all the crypto collapse that's going on, such as the Luna, Celsius, and FTX incidents. This means that there's a growing number of investors in Bitcoin, and they are there for the long haul. 2. The total hash rate for Bitcoin has also been going up. Hash rate is just the total combined computational power that's been used to mine crypto. The higher hash rate means that there's higher demand to mine the crypto, which would imply the value of Bitcoin is going up. And so far, the value of Bitcoin has been correlating nicely with its remaining supply. And not to mention, the next Bitcoin halving event will occur in April 2024, which will further decrease the number of new coins entering the network. And 3, as mentioned earlier, with Bitcoin ETF out now, there will be more money coming in from both institutional investors and retail investors who were previously staying out. But with that being said, I will still have to give you some word of caution. Bitcoin is that kind of asset where it can go up super fast and crash super fast. So as always, it should only be a small tiny part of your portfolio which you are willing to lose. Anyway, that's all for this video. Hopefully, you found it useful. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.